If you're a teenager and you want to start investing, you're already ahead of the game. Most people don't even think about investing until they're much older, but the earlier you start, the bigger your advantage. Time is your secret weapon. And even small amounts invested now can grow into something substantial thanks to the power of compounding. Here's the shocking truth. A teenager who starts investing just $50 a month at age 15 could have over $1 million by retirement. That's the power we're talking about. So let's break down exactly how you can start investing as a teenager, step by step, and set yourself up for a lifetime of financial success.
Stack it up real high, come here to be in the know. Come here, enjoy the show, cause it's Warren's money time. Let your future shine, yeah, it's Warren's money time. Wealth on the climb, hear that information flow. Stack it up real high, come here to be in the know. Come here, enjoy the show, cause it's Warren's money time.
First, let's talk about what investing actually is. Investing means putting your money into assets, like stocks, funds, or even businesses that have the potential to grow in value over time. Unlike just saving money in a piggy bank or even a regular savings account, investing gives your money a chance to work for you and multiply. But before you start, you need to understand the basics: risk, reward, diversification, and compounding. Here's what most adults don't realize. Teenagers have the most powerful investing advantage of all: time. While your friends are buying the latest sneakers, you could be buying shares that turn into serious money. Now, if you're under 18, you can't open your own brokerage account by yourself. But don't worry, there's a solution: custodial accounts. These are investment accounts that an adult, usually your parent or guardian, opens for you. The money is yours, but the adult manages it until you reach legal age. You can invest in stocks, ETFs, and even mutual funds through these accounts. Ask your parents about opening a custodial account with a reputable broker. If you're in the UK, you might also look at junior ISAs, which are tax-advantaged accounts for minors. Let's say you're 13. This is the perfect time to ask your parents to help you open a custodial investment account. You might only have a little bit of money, maybe from chores, a part-time job, or gifts, but even small amounts add up. Don't worry if your friends laugh at your 50-cent dividends. Stick to the process, keep investing, and let compounding do its magic. Remember, every great investor started somewhere, and the earlier you start, the more time your money has to grow. Here's something that will blow your mind. That 50-cent dividend your friends are laughing at could be worth hundreds of dollars in 30 years if you reinvest it properly. At 14, start thinking about your talents and interests. Maybe you're good at coding, sports, art, or making videos. These talents can turn into side hustles that earn you extra money to invest. The key is to focus on what you're passionate about, because you'll be more likely to stick with it and improve. At this age, also start learning about different companies and industries. Invest in what you know and use. Maybe your favorite tech company, a brand you love, or a business you understand from your own life. When you're 15, make it a habit to stash your money. This means saving a portion of everything you earn: birthday money, allowance, or part-time job income. Don't spend it all on the latest gadgets or clothes. Instead, set aside a percentage for investing. This habit of paying yourself first is crucial. Try to automate your savings if possible, so you don't have to think about it every time you get paid. This is where it gets really interesting. At 15, every dollar you invest is worth about $16 when you retire. Think about that the next time you want to buy something you don't really need. At 16, it's time to hone your skills. Maybe you're already making some money from a side hustle or part-time job. Keep improving your skills, because the more valuable you become, the more you can earn and the more you can invest. If you're earning money, you might also be able to open a custodial Roth IRA, which is a retirement account for minors with earned income. This is a powerful way to start saving for the long term, with tax advantages. When you turn 17, focus on milestones like passing your driving test. This gives you more independence and opens up more job opportunities. Maybe you can start delivering food, tutoring, or offering rides to younger students. Every bit of extra income can go straight into your investment account. At 18, you're officially an adult in most places, and you can open your own bank and brokerage accounts. Here's what you should do first. Open a bank account if you don't have one already. This is your base for managing your money. Next, consider getting a credit card to start building your credit history, but only if you're confident you can use it responsibly. Pay off your balance in full every month to avoid interest charges and debt. Here's where most 18-year-olds make a huge mistake. They think they need to wait until they have more money to start investing. Wrong. Start with whatever you have, even if it's just $20. Now, open an adult investing account. This could be a standard brokerage account, a stocks and shares ISA if you're in the UK, or a Roth IRA in the US if you have earned income. Start with low-cost, diversified investments like index funds or ETFs. These funds automatically spread your money across many companies, reducing your risk and making it easier to grow your wealth over time. At this point, you might be thinking about university. Consider whether going to university is the right choice for you, and if so, how you'll pay for it. Avoid taking on unnecessary debt, especially high-interest credit card debt. Student loans can be manageable if you borrow wisely and have a plan to pay them back, but don't let debt ruin your financial future. One of the most important things to remember is to avoid bad debt. Don't borrow money to buy things you don't need or can't afford. If you use a credit card, pay it off in full every month. Don't fall for get-rich-quick schemes or investment scams. Stick to tried-and-true methods. Save consistently, invest for the long term, and avoid unnecessary risks. If you're finding value in this analysis, you need to know about my free newsletter on Substack. Every week, I send out exclusive market insights, stock picks, and investment frameworks you won't find anywhere else. It's completely free, and over 2,500 investors are already getting these delivered straight to their inbox. The link is pinned in the comments and in the description below. Don't miss out on these weekly insights. Now, let's talk about side hustles. Starting a side hustle as a teenager is one of the best ways to increase your income and learn valuable skills. You can mow lawns, tutor younger students, sell products online, or even start a YouTube channel. If you want to get into e-commerce, you can use tools like AI-built Shopify stores that are preloaded with winning products and ready to sell in minutes. This is a great way to learn about business, marketing, and customer service while earning money to invest. Here's the secret most teenagers don't know. The money you make from side hustles in your teens could set you up for life if you invest it instead of spending it on things you'll forget about in a month. Long-term investing is where the real magic happens. The stock market goes up and down, but over time, it has historically grown in value. The key is to stay invested even when things look rough. Don't panic and sell when the market drops. Instead, see it as an opportunity to buy more shares at a lower price. The longer you stay invested, the more your money will grow thanks to compounding returns. Diversification is another crucial concept. Don't put all your eggs in one basket. Spread your investments across different companies, industries, and even asset classes like stocks, bonds, and funds. This helps reduce your risk and makes it more likely that your portfolio will grow steadily over time. As you continue your investing journey, keep learning. Read books, watch videos, and follow reputable financial educators. Ask questions and seek advice from people you trust. The more you know, the better decisions you'll make. Finally, take advantage of any promotions or bonuses when you open new accounts. For example, some platforms offer free shares or bonuses when you sign up using a promo code and make a deposit. This is a great way to get started with a little extra boost to your portfolio. Remember, investing isn't about getting rich overnight. It's about building wealth slowly and steadily over time. Start early, stay consistent, avoid bad debt, and keep learning. Your future self will thank you for the decisions you make today. The teenager who starts investing today could be the millionaire of tomorrow. Don't let that be someone else. Let that be you. Good luck and happy investing.
Stack it up real high. Come here to be in the know. Come here, enjoy the show. 'Cause it's Warren's money time.